Hey guys, welcome back to the channel. I hope everyone is doing well. Happy Friday. I hope everyone had a good week. And if you didn't, well, hopefully the next one will be better. So, thanks to this kind viewer. So, Pao Bunyan. So, I wonder if this person is Brazilian or not. And if you are, awesome. So, what's your take on TUGN ETF? Think it's going to be around long or it's going to go out the door like weekly or TGIF? I think this is just my opinion, but I think this one might have a little bit of staying power. And unfortunately, they have a funny name, so of course, like I had to make an immature joke. So, will Tuggin offer stress relief for frustrated high yielders? I think the answer might be maybe. I like this person's thought process. This person's thinking ahead. Like, well, you don't want to stay in something that's, that might die, within a few months or maybe like a few years. So this one, at least, I think it seems like on the surface, this new company, STF, Tactical Growth, or I guess like whatever STF stands for, and then like Tactical Growth and Income Fund. I think they have the right idea. The expense ratio at 65 basis points, it's not that bad. It's right in line with like the NEOS funds, and it's also there's active management. And if you're looking through the components, it's like the usual like Nasdaq uh, options, and then like the treasury and cash allocations. So I think like besides the name, I think they have like some serious intent. So it's STF management. I guess they're relatively new. Um, they have an end of monthly payout, so that's always a good thing. But the yield, I guess like most people probably won't be too exciting. Won't be too excited for this because it's kind of a little bit lower than what Neos is offering. But if they can keep like the net asset value like steady per share, then this might be something to consider. I think like for myself, I mean, given that there's so many like triple Q covered call or cash secure put type of ETFs out there already, this might be a good like hideout because it's on the smaller side. So let's say like triple QY, I don't want to keep beating up on the fines because I guess there's a lot of like YouTube hype, and then consequently they're getting a lot of I guess like high yield tourists. So in case like triple QY or any of the big triple Q funds out there, like if you feel like the distribution has kind of been sliding a little bit, most likely it's due to a combination of just poor management, some just general volatility decline, and then also like tourist erosion as well. So then like this could be like a temporary like hideout in case this way you can wait for like the other funds to kind of clear out a little bit before you jump back in. So, whoops. So sorry about the typo. So it should be temporary shelter until you can find a better triple Q high yielder. I can't see it being like a main driver. And this is just a personal opinion. Of course, like you can feel free to do whatever you need to in your own personal portfolio. So I see this as more of a like a triple QI or triple QT. I guess whenever Defiance decides to finally roll that out as an alternative. So I guess like if you're already in it and you're maybe waiting for like triple QT, the it might be. I mean, it's not a bad thing. I guess like the only thing you should watch out for is like short-term capital gain or even worse like short-term capital losses. I guess when you swap in and out of ETFs, but unfortunately this is the game that we have to play. I guess when I was making these videos, I didn't expect people to kind of crowd in into certain names and kind of ruin it for other people. So I guess like everybody has to kind of decide for themselves whether it's worth moving in and out of like ETFs, or just have to kind of suffer through like tourist erosion. So it's not a bad strategy. I mean, it's selling credit spreads on like the NDX one month out, and then you also have like the kind of like treasuries to kind of like balance out the volatility a little bit. So and again, like 11% might not be like the most exciting, but if they can maintain that over the course of like the life of this ETF, it's you have to kind of decide whether that's right for you. And another thing, right now, like the volume looks a little bit light to me, but you know, the irony of this, like it might be good for a shorter term, like a tactical trade. So, again, like if you're waiting for like a certain ETF, but then like you also don't want to like just sit in cash, like TUGN might be, temporary relief for you. And like just in general, like the pros, uh, according to the website, it's a rules-based risk management. So, well, first, like I'm glad there is some risk management, and then it's rules-based, supposedly. So let's assume that this is true, and for some people, this might make sense. And then for like other people, like you probably want to keep like income-based investments like handy just in case like you want to do this yourself. You probably if like for example you already have like a pre-existing like treasury position, tuck-in might not make the most sense. But again, it's up to you guys. Of course, like it's always handy to have dividend aristocrats, just like other stuff, just in case like this ETF doesn't work out. It's not the highest expense ratio, but it's still kind of, you know, compared to like others, like there's definitely more competitive expense ratios out there, but it's not the worst. So, and then of course, like since it's actively managed, you don't have any control over the option strike selection. So you might want to keep an eye out on like the website. So at least like they kind of like similar to other ETF companies, like they'll give you like the detail on what it holds. And then if, you can decide for yourself whether you like it or not. And then of course the overall market implied volatility for all products is it's kind of on the lower side. There's like some spike ups here and there, but it looks like the overall trend might be heading down. So that's nothing that we can do. Of course, like the share price can get cheaper, but if these guys are actively managing it, supposedly, then we might not have to worry about it that much for this particular ETF. And of course, like the yield, again, depending on how they manage it, uh, it could be consistent month to month. I mean, it'd be great if they can do it consistently. So, keep an eye on it if you decide to kind of jump in. If you like this type of content, please consider giving this a like. All subscriptions are definitely welcome. And, if you can throw a super thanks my way, uh, you know, that'd be greatly appreciated too. But if not, don't worry. I'll see you in the next video. So thank you and bye now.